What has been really gaining in popularity is ETFs, or exchange traded funds. Either way, exchange traded fund or ETF, they mean the same thing. And the reason they're popular is they're similar to mutual funds. They're very similar, of course, to an index mutual fund, but they've got some aspects of individual stocks in it as well, too. It's kind of this weird hybrid thing that can give you some different types of advantages and disadvantages around it as well, too. So let's talk about exchange traded funds and kind of how they work. So first off, an exchange traded fund holds a basket of underlying assets, like a mutual fund, right? It's holding different things, maybe different stock or whatever, it might be bonds, whatever that exchange traded fund is tracking. But let's talk about it as a stock fund. Let's say it's a stock exchange traded fund, and it's tracking a particular index is what they do. And it's just like index funds. There's all sorts of choices as indexes, from tracking the NASDAQ to the New York Stock Exchange to S&P 500 to international markets to sectors, whatever. You can find exchange traded funds that do all sorts of stuff, and that they're tracking an index or tracking a basket of stocks. Typically is how that would work. So it's very much like an index fund, right? Pool of assets tracking an index. They also, like an index mutual fund, have a low expense ratio. It's not related to active buying and selling. It's tracking an exchange, right? It's tracking the stock exchange, or it's tracking the NASDAQ, or it's tracking the S&P 500. It's tracking something from an index aspect. But where the exchange part really comes in is it's traded on an exchange, like a stock, really. So this is where it's that hybrid of mutual fund and individual stock. If you buy a mutual fund, you buy it, maybe from your employer. If you've got a government-sponsored program in the United States, it'd be a 401k. You could buy it from your employer through that, or you buy mutual funds through a broker or a financial planner, or you can go right directly to company websites like Fidelity or Vanguard or T. Rowe Price or whoever, and go and buy mutual funds right directly from them. But you're buying it from some of these mutual funds that are outside the actual stock exchanges or markets. Because then what the mutual fund does, they go on the exchange and they buy the individual stocks that make up their index fund or make up their actively managed fund. Exchange traded funds track the index, but they're actually traded like a stock on a stock market exchange. And so you get the benefit of more quicker liquidity. You don't have to wait till the end of the day. It's basically selling right there. It's priced every day. Its price constantly is changing like a stock would be, versus, let's say, like a mutual fund, which has an NAV, or net asset value. Basically, at the end of the day, it all trues up, and you have a number that's your price you'd pay on a daily basis for a mutual fund, one time a day. Exchange traded funds trade throughout the day. So if the market's really crashing, you can buy and sell immediately, where a mutual fund, you have to wait to the end of the day, and whatever its ending asset value is what you pay for it. So much more liquid with exchange traded funds. You pay a commission to a broker or whoever's, a transaction fee for buying and selling exchange traded funds, just like a stock, as part of that low cost in there too. And you can buy one share. There's no real minimums like you have with like mutual funds. One of the challenges of mutual funds is they might take thousands of dollars in many cases to invest in them. Some might have like a limit of $3,000 for some index funds. For example, some of the Vanguard funds, they typically start $3,000, or I know in Vanguard they have Admiral class, which is lower expenses even, but you got to have $10,000 to invest in it. Well, not everybody has $10,000 to invest, but they'd like to invest. An exchange traded fund will give you all those benefits of index mutual funds by buying one share at a time. So if you want to buy 30 shares of exchange traded fund, you could do that without having to come up with maybe thousands of dollars to buy a mutual fund. So exchange traded funds, for all those reasons, have been really growing in popularity as a way of building out your total portfolio. Remember, your stock portion of your portfolio is part of an overall portfolio that might have bonds and cash and other things in it. And then within that, you could have things like individual stocks, active mutual funds, index mutual funds, and now exchange traded funds as well too. And you can build your overall portfolio that meets your needs and really helps you get to your goals. But exchange traded funds, kind of that hybrid where it's like a stock, buy and sell, very liquid, you can buy at smaller quantities, but low cost as well too, and get you a wide variety of diversification as far as the holdings within the exchange traded fund. And they track their index just like an index fund would be. So exchange traded funds, check them out.